Inflation really started to hit the headlines when we were told that inflation is transitory. Well, now we've seen how untransitory inflation really is, and the Federal Reserve Bank is in a full-blown war to fight inflation and bring it down. If you want to understand when inflation will come down, you have to understand what makes inflation go up. And the entity that is in charge of controlling a monetary supply is the Federal Reserve Bank, and we've been hearing about 3 different causes of inflation. One of them is greedy business owners. One of them is a supply chain issue, and the third one we haven't really been hearing from the Federal Reserve Bank or the government, but the third cause is excessive money printing. Let's start by talking about these. Let's start by talking about greedy business owners, because this is a very attractive topic, especially for the mainstream media. Now, if I am in the business of selling, say, markers, and I've been selling these markers for $2 a piece, and now I see that there is this whole inflation thing going around, and I want to capitalize on this whole idea of inflation, that way I can make bigger profits. Now I can go out and start selling this marker for $10 instead of $2. Now, if I control the market share of the marker business, now you have to pay $10 to buy this marker, and you're going to be very angry. You were buying markers for $2 a piece, now you're paying $10, so it's very expensive for you. Now, I'm making huge profits, but eventually an entrepreneur is going to look at this and say, wait, it cost me 50 cents to make this marker, and me, this greedy business owner, is selling this marker for $10? There's a huge margin there. Now, this new entrepreneur is going to see this opportunity. They're going to start creating markers. Maybe they'll be a little bit better. Maybe they'll be the same. And then he's going to charge them, or she's going to charge them for $2 or $3 or $4, maybe even $1, depending on how low they want to keep their profit margins. And they're going to undercut me. And now you're going to have the opportunity to get a product for a better price. And now I'm going to see this person, this new entrepreneur, stealing my market share, and then I'm going to have to cut my price in order to compete against them to bring my inflation back down. So yeah, you will see times of greedy business owners jacking up the prices of their products to make bigger profits, but that will be the definition of a transitory or temporary inflation, because if they're just making bigger profits, then somebody else is going to see those bigger profit margins as an opportunity to come in and undercut that business, because now these bigger profit margins make it much more attractive for so many more people to enter that business and start selling more products to compete against mine, because the profits are so big, and then that will then make the inflation go down to bring prices back to earth. Now, the same model isn't very feasible when the cost of building a marker have gone up significantly because the margins are smaller, but I'll get to that in just a second. The second main cause that many people like to point fingers at for the cause of inflation is supply chain issues. So going back to the marker business, I sell these markers, but there's an ink shortage or there's a plastic shortage, so I can't build these markers. Now I have a limited supply of markers, and I have to source more products, which is costing me more money, which is causing me to raise the price of my markers. Again, this could cause a temporary price disruption where now I have to charge more for you to get a marker because my costs have gone up so much. But then if my costs go down, I might not want to bring down my price because I'm making bigger margins, but again, that's going to attract more competitors because my margins are so high, and so more people are going to want to come in and compete. But supply chain issues can cause temporary disruptions to prices because you have to pay more money to get your stuff because there's a disruption in the supply chain. This is what people keep pointing fingers at, where there's all these supply chain issues in China. We can't get products here in the United States, and the manufacturing plants are overworked, so we're not having the ability to produce more stuff because of the supply chain issues. But there is a cause to those supply chain issues, and this brings me to number 3, more money being created. Now, the best way to understand this is to give kind of an extreme example, so let me do one of those. Let's assume now that the government printed $150,000 per person in America, and they sent this money out. So now everybody got a $150,000 check. What's going to happen? Well, the line for Lamborghinis is going to go out the door. You're going to have a 5-mile-long line for people wanting to buy a Lamborghini because not everybody has $150,000. Then what's going to happen next? Well, the Lamborghini store owner is going to be very overworked, and they're going to start selling out of cars very quickly, because they're not going to have enough cars to give to all these people or to sell to all these people. So now they're going to call up the manufacturing plant, and they're going to say, we need a lot more Lamborghinis. Now the manufacturing plant is going to go into overdrive. They're going to start producing more cars, they're going to need more raw materials, and they're going to need more workers. Now, they might have a tough time sourcing all of their raw materials and getting enough labor to actually produce the cars. Because who's going to want to work in the manufacturing facility, in the manufacturing plant, when everybody has $150,000 for free in their pocket? So now the suppliers are going to keep getting squeezed. While at the same time, Lamborghini is going to keep calling them saying, where are our cars? We need to keep selling these cars. We have so many people that want to buy our cars, but you're not producing enough. So now the supplier is going to say, hey, Lamborghini, we need more money for a car because we have to pay more money for our labor. And we're having a tougher time to find all of our raw materials. We have to pay more money for our raw materials because there's not enough raw materials out there, so we have to source more of it, and it's costing us more to get it. We need more money for our car. Now Lamborghini is going to turn around and say, it's costing us way more money to produce these cars because we have to pay more in labor because everybody has $150,000. So people don't want to work for $15, $20, $25, even $50 an hour because everybody has 150 grand. So now they have to pay so much more money to the labor. They have to pay more money for the parts. And now the car went from 150 grand to $5 million. What's going to happen? Well, now less people are going to want to buy a Lamborghini, but the price of a Lamborghini went up. Why? Well, there were supply chain issues. I mean, the manufacturing plants, the suppliers, they couldn't get their materials, they couldn't get their labor. And at the same time, you had the greedy business owners. I mean, the Lamborghini company had to charge more money for the cars. The suppliers had to charge more money for the parts. But at the core, it all came from here. More money was printed and sent out. When you produce more money without producing more wealth, it causes inflation. The word inflation literally comes from the word inflate. What are you inflating when you have inflation? You're inflating the monetary supply. You're inflating the money supply. When you have more dollars out there without producing more wealth, well, now each dollar has less buying power. And you see that happen when you have more money created. And over the last couple of years, we had printed trillions and trillions and trillions of dollars. One of it was in the form of stimulus checks. One of it was in the form of unemployment checks. One of it was in the form of PPP checks that went out to businesses. One of it was in the form of corporate bailouts. But then you had so much other government spending, trillions of dollars worth of government spending. You also had trillions of dollars of Federal Reserve dollars entering our markets, which inflated our economy. It inflated our monetary system. But now we're paying the price for that. What is that price? Inflation. Now, we can point fingers at what's the now cause of inflation. It's supply chain issues. It's greedy business owners. But there's one root cause, and the root cause is here. It's the money printing. When the Federal Reserve Bank prints more money and the government keeps spending money that they don't have, you will pay the price through inflation and taxation. And we're already seeing that cost now through inflation. And this is where now the Federal Reserve Bank and kind of the government are working to bring inflation down. The Federal Reserve Bank is working to bring inflation down by trying to prick the bubble that we created. How are they doing that? By raising interest rates and by selling off their balance sheet. AKA, the Federal Reserve Bank has bought up something like $9 trillion worth of assets over the years. And now they're working to sell this off. That way they have less money that's printed. And the government can also work to fight inflation by spending less money. Because when they're spending less money, that means they're not spending money that they don't have. Remember, the government gets money from taxpayers through tax dollars. You work hard at your job, you make money from your investments, you make money from your business, the government taxes that, and that's how they make money. Well, the government spends more money than it brings in. That's why we have $31 trillion worth of national debt. That's why we have this huge national deficit. When the government spends more money than they bring in, that causes more inflation because they have to cover this debt, this deficit somehow. And the way that they do that, one of the ways is through the Federal Reserve Bank printing more money. So one of the things that the Fed and the government can do to cut down inflation is to see less government spending. And we are not really seeing that happen on the government level yet. I mean, they did pass the Inflation Reduction Act to hopefully bring inflation down, but that is a spending bill. It is a very expensive bill to hopefully bring inflation down by improving supply chain issues. But remember, what is the cause of these supply chain issues? Now, we can say that the cause of the supply chain issues that we're facing were bad infrastructure and all the other issues in the supply chain. But the reason why we're facing these supply chain issues is because so much money was printed and then people were buying stuff. Businesses were buying things while nothing was being produced. Remember, everything was shut down when the pandemic was going on, but money was being printed. And so if no clothes are being produced, for example, but you have money to buy clothes. Now you're going to go to the store and buy your clothes because you have money to buy clothes. And now you're going to buy the clothes, and now the shelves are going to get empty, but nothing's being produced. So now there's going to be a backlog, a back order for clothes, but the manufacturing plants are shut down. And this is how you start to run into these supply chain issues, because people have money that was created out of nothing, but nothing was being produced. That causes supply chain issues, which then causes the price of things to go up. You should also understand this. Price gouging is bad. I am not advocating price gouging. It is a bad thing. However, some people will do it. You have some good people and you have some bad people across all whatever demographics you want to use. You have some good people and some bad people in every religion. You have some good, some bad business owners. You have some good, some bad people. You have good and bad people who are rich and who are poor. Now you have some bad people who are business owners who want to do price gouging. Now the nice thing about our economic system is when you have this type of price gouging happen, it creates opportunity now for an entrepreneur to see this opportunity, to then take advantage of that, to create a better product at a much cheaper price. That way the price gouger gets hurt financially and goes out of business or has to change their model. Now, this price gouging will cause an inflation in prices in the short term, but over the long term, it creates opportunity for somebody to come in and create a better product. But when you have the inflation issue, now there's a deeper problem. It's not just the price gouging, it's the money that's being created, which has now caused more inflation, causing the raw prices to go up, because now when you produce a product, it's costing you more money. Ford just came out and delivered the same message. They said that now they're going to have to raise the prices of their cars even more because of all the costs of their materials rising so fast still. And it's also one of the reasons why they're not able to finish so many cars that they're building, because the cost of producing these cars are so much bigger. Now, of course, we did cover this entire story in Market Briefs, which is my free financial newsletter. If you like staying up to date on the financial news, if you're an investor, you need to join something like Market Briefs. I like Market Briefs, not just because I created it, but because it is a free resource that keeps you up to date on what's happening in the financial markets into a fun, easy, and witty email. You can read it in less than 5 minutes every morning. And did I say it's free? So if you want to join Market Briefs for free, I'll put the link to how you can do it down in the description below. But this inflation problem is not going away, and it's something that's going to stay around. And now the question is, when is it going to go away? Well, this is where now the Federal Reserve Bank is facing the challenge of fighting inflation through raising interest rates. Raising interest rates comes with a price, slows down the economy, it slows down asset prices, it hurts stocks, it hurts real estate, it hurts crypto, but it can help cool down inflation. And now we're at a time where interest rates are lower than inflation, and this is where the Federal Reserve Bank has come out in their most recent meeting and said that they wanted to flip. They want positive real rates. What positive real rates mean is that they want their interest rates, the Federal Reserve interest rates, which are currently between 3% and 3.25%, they want the Federal Reserve rates to be higher than inflation in order to bring inflation down. Now, the Federal Reserve Bank is saying that they expect that this number will be around 4.4 to 4.6%. They want to bring up the Federal Reserve Bank interest rates to 4.4% by the end of 2022, and then they want to raise it to 4.6% by 2023. And what they're saying is, by the time they do that, they expect inflation to be lower than the Federal Reserve Bank interest rates. And so what does that mean? They want real positive rates, meaning the Federal Reserve Bank interest rates will be above inflation. But the consequences, what happens if they can't do that? Meaning, what happens if inflation doesn't fall hard enough? They might need to raise interest rates even more in order to bring inflation down, which comes with consequences: a slowing economy, hurting asset prices. And so this is where you got to understand, one, this is what the Federal Reserve Bank is saying today. They could change their mind in the future, but in order for the Fed to actually achieve these goals, it's going to come with economic pain, it's going to come with layoffs, and it's going to come with pain to asset prices. Stock prices, real estate prices, crypto prices, but this also creates opportunity now for minority mindset thinkers who understand what's happening and who have access to the capital, meaning cash, to capitalize on opportunities, aka buy assets at a discounted price. So what does this mean? Be prepared and be educated. Start putting aside cash, that way you can take advantage of opportunities, because recessions and market crashes make more millionaires than any other time. And this is where you want to be prepared and understand that this inflation fight is going to have consequences, but that can also mean opportunity for you if you're prepared. Now, if you're doing the math to see how much money you have to invest to retire off of, you might be a little bit discouraged, because you might say, Well, if I invest $100, I'm only getting $8 a year. That's not that much. If I invest $100,000, I'm getting $8 grand a year. That's about $22 a day.